So we had the first day of trading this week, and the market operated mostly in the red for most of the day. But the encouraging news is that in the latter part of trading, the market rose and the Dow ended up quite nicely at 0.86 higher. The S&P was up just slightly. Keep in mind, it was down for a good part of the day, and we were continuing the sell off from last week. And the NASDAQ didn't quite get out of the red. It was down 0.38%. It was down substantially, well above 1% for the most of the day. A lot of the tech stocks, as I'll show a little later, sold off. The Russell managed to have a small rise of 0.24%. The Dow in particular is down, I think, to this point about 6% or so. If I look at it in the last, let's call it a month and a week or so, it's down 6.04%. So the Dow is still on its way to being corrected. And I don't know that that's the index that I'm looking for a correction in. The one that I'm looking for the correction in is the NASDAQ, because it has been up so much for 2 consecutive years. And it too is on its way to being corrected, down 5.38%. If we look at the recent high that was established December 16th. So if we have continuing sell-offs, we may see a correction in the NASDAQ, which would be, I think, welcomed by investors like me that are looking at the market as an expensive market at this time. But we'll see. We'll see if the market continues to sell off. One thing I would say is it's kind of been orderly, this sell-off. I don't think anybody's flipping out over it, which is good. I think it's selling off, and kind of the analysts and the media are pretty much kind of going with it from what I'm seeing and hearing. So it's good to see. It's good to see that, hey, maybe we could give up some of the gains in some of these sectors that were really, really red hot. So let's see how far this correction goes. For all I know, it starts to rally from here, or it just keeps going down. We'll see. Looks like Mike, very good to see you. And I wanted to ask, how your Humana stock was coming along. I saw Humana did really well today, along with other healthcare stocks. And good afternoon for me. If every day was like today, buy in the morning, sell in the afternoon, I could retire. Yeah, I think so. We'd be day traders, I guess. But Android PC, very good to see you. Thanks for joining. All right, so we've got the major indexes out there. I like showing a few things that kind of tell me where the sentiment of the market is. Looking at the most expensive or valuable companies, I should say, Apple has been on a downward slide. It's down 1%. Year to date, it's down 7.56%. NVIDIA, it's doing okay for 2025. It's only down 1.79, but today was down about 2%. Microsoft, only down 0.42%. And it's down 1% for the year to date. As I showed from the high to this point, the NASDAQ's down about a little over 5%. So for these major caps to be holding their value, I think is really impressive. Google, not faring too bad, just down a little bit today. For the year to date, it's only down 0.8%. Amazon, ditto. Meta had a down day today, but overall, this has been the best performer, I guess, out of the top 10. No, I guess TSM would be number 1, but close to it. I guess number 2 position would be Meta, and so forth. So the major stocks, the first top 6, all down. So that looks interesting. And I think it's fair, because over the last 2 years, these stocks have been booming. So if they have to give up some of their gains, I think that's okay. Looking at the sectors, materials did really well today, up 1.35%. Year to date, it's in the green. Energy has been having a good 2025. We just finished trading on the 13th. So we got a long ways to go for the year, but it's a good start for the year. Year to date, energy, I think, is the top sector so far, up 4.43%. Not a bad place. I think it's been beaten up for the last really year and a half, I would say, maybe 2 years. And it has a lot of upside. If oil prices continue to go up and if they establish maybe an 80 to 90 trading range, oil companies just become incredibly profitable. So if oil keeps going up, I think that could really be a nice sector for 2025. Real estate had a good day, but it's not having a good month, not having a good year so far. And industrials had a good day. Healthcare in the green year to date, and it had a good day. That is good to see because historically, healthcare has really performed for me. And it was surprising how poorly it did for the last 2 years. So I think there could be some very good upside in several stocks. I'll cover CVS a little later, but I think there's a lot in healthcare that could really work in 2025. The worst sector is technology, and nothing to be overly concerned about. It's probably just all those big gains in the sector, giving up those big gains. But there are some stocks that I think are just severely overvalued. And I can cover a couple. I'm going to start with one that you probably haven't heard of, or maybe only a few investors have heard of, that I think is overpriced. And I'll go over it in a bit. So that's where we're at with sectors, where the market's at. This week is officially the beginning of earnings season. And earnings season is going to bring a lot of data points. The markets will move based on what companies are reporting. And it all starts on Wednesday, January 15th. JP Morgan, one of the big banks, they'll announce before the market opens. So really, Wednesday, the trading day of Wednesday, will be moved by the financial sector. With JP Morgan, Wells Fargo, Goldman, BlackRock, Citigroup, Bank of New York Mellon, even Synovus Financial. Just a lot of firepower within financials, and financials tend to tell us, what's the activity, what's the loan activity, are these interest rates really affecting these big banks? So those guys will set the table, and they'll also be citing what their perspective is on 2025, what they're forecasting, and how they're guiding for their stocks. So, get rested up, because earnings is upon us, and earnings will last for roughly about a month. So we're going to see company after company announce, and we'll see how they're guiding, how they can, in a lot of ways, substantiate the stock prices they currently have, especially in technology. And if they can't put up really good earnings, if let's say their stock price is really high, the stocks are going to sell off. You could see a company reporting good revenue growth, but it wasn't good enough. The stock price was based on spectacular revenue growth, not just good. And you could see some stocks selling off. So it is going to be an eventful, 30 days starting on the 15th. And it doesn't stop there. We still have some other companies that come after that. But it's going to be pretty involved and active for the next 30 days. Hang on tight, and I think the market is going to move. All right, so thanks everybody for joining. We are 9 strong on the live stream. Looks like Sergio made it. Great to see you, Sergio. I hope you are doing well. And it looks like Mike commenting on Humana. Let's see, I hate to say that I sold Humana to harvest some tax losses. Well, the healthcare space is beginning to work, and I think it's got a lot of mileage, or a lot of gas in the tank. I think healthcare as a space could really work this year. You want to take a look at HNST, OGN, glad to. HNST, is that the Honest Company? And then the other one, I think, is OGN. So we'll take a look at those two. Glad to. Golden, thanks for joining. What are the best energy stocks to invest in? You want to turn 3,000 into 30,000. Well, I think there's good energy companies out there, but it'd just be a guess on which stocks are going to get you from 3 to 30. Zoox is trash. You're interested in PHIO? Okay. Sergio, you think AMD is being fairly priced? Interesting. I think the semiconductor space, I think some parts of it, like I'm buying into Qualcomm, and some parts of it are still, I think, really expensive, like Broadcom. I started shorting Broadcom again. And I used to own Broadcom, so I've been on both ends of that one. But you may be right. I think AMD could be fairly priced. Might be there. And then, yeah, and it looks like Golden. I think Mike's doing you a solid there. He's got a good comment there. Yeah, and earnings season is mentioned, Sergio. I think it really starts Wednesday because that's when big names come out, and it's not going to stop. It's just going to be day after day, just big companies, big companies. The ones that we're really going to be glued to our seats is going to be, the big stocks like Apple, Microsoft, Google Alphabet, Amazon, Meta, the big giant companies. But this week alone, TSM is going to announce, I think on Thursday, that's a big one. They really tell us where's the semiconductor industry. That one could move the whole space big time. So it should be a very big earnings. Android PC. Looks like we're 10. Nice. Thank you, man. Appreciate the support. All right. So let's get into some stocks. Start looking at a couple of stocks that were brought up, and I will go with HNST. The Honest Company, I don't think I've ever evaluated the Honest Company. I know who they are. It was started by that actress. I forgot her name, but the Honest Company manufactures and sells diapers, wipes, skincare, and wellness products. Now, the spin is they use materials. They use, like, if it's a personal care product, they try to use non toxic, materials, so that it's really easy on the body and easy on the environment. They also have, just a variety of products that are just probably a little more expensive, but kind of have a little more thought put into them. And these guys are a consumer staple. Okay. They're headquartered on the West Coast in Los Angeles, not too far. Their headquarters, the last time I heard about these guys, is in Santa Monica. That's not too far from the big giant fires that have been going on. Santa Monica is, I think, borders Pacific Palisades, or at least it's really close to it. So these guys are a very small cap, 593 million. Revenue 368. Wow, Ford P 840. What is going on? Over the past year, up 106%. And it's because it's a really low price stock. These low price stocks, right? They're, be careful. Be careful what you're asking for. Yeah, Jessica Alba. That's it. Really nice actress. I think she's really liked, right? And I think she had children, and she started to put her acting career a little bit on hold while she raised her kids, and she started this company. So the Honest Company, these low stock prices, right? Yeah, I think you can make a lot of money, but I feel a little bit like you're probably going with some companies that most certainly have been troubled. And if they pop up, that's great. But I would expect that a lot of these are going to be losers, and you might even lose your investment because if they go bankrupt, stockholders are last in line. They pay off debt first and all kinds of things. The employees should be, paid their salaries and so forth. By the time they get to stockholders, not a lot's left. Not saying that about honest companies, just a low stock price tends to tell us that's a troubled company. They have been growing their revenues. One year was a down year, 1.57. That's because 2020 was a real boom year. Okay. And gross margins, not bad. I would have thought their gross margins would have been lower, but at 37% for the trailing 12 months or 30% roughly for the last full fiscal year is not bad at all. Free cash flow is positive. That's good to see. Let's take a look. Let me look at the quarterly on the free cash flow. Curious to see what their last quarter looks like. So the last full quarter is, call it $15 million. It's not a bad number. Okay. Okay. So they're about $600 million company. Let's take a look at their balance sheet. Balance sheet. Total debt, not too bad. 24 million. They have 54 million on the balance sheet. So no debt really. They have more cash than debt. So this one here, if you think it's going to do well, I mean, I don't see that they're going to go out of business because they're producing free cash flow. They have a balance sheet with more cash than debt. Okay. So they're going to be operating for a while. I could totally see this company be acquired because a big company like Procter and Gamble, they might be like, hey, let's add this company because we can have one more brand that gives us some grocery store shelves with, the Honest products, or maybe the Honest products are found in boutique grocery stores or places where, they're not big, gigantic grocery stores like a Kroger. They're more like, hey, it's a market and it serves that community. And that community is probably a higher income level community because these products tend to be a little more expensive and appreciated by those who want better ingredients in their products. Now, the rise today, 6.29%. Why is it rallying today? So 5 days ago, the CFO planned to retire. What's causing that rally? Let me take a look over here. So 11 hours ago. So one investor sold shares, one investor increased the number of shares sold. So I'm not seeing a big piece of news on this company, but the stock's really moving in the after hours. So in general, on this one, Mike, I don't see a problem with the Honest Company. I think if you have, if I'm not going to invest in this company, it's a consumer staple. It's just not a sector that I'm interested in, but that's me. Now, if you believe that the Honest Company is on the right path and probably going to keep growing and good things are coming to the company, I think they're going to be around for a while. I think their fundamentals are sound. They're growing. They're profitable. They're generating free cash flow. Their balance sheet's good. So that's as far as I would go with just forming an opinion about the company. Again, I wouldn't invest just because of the sector. I don't want to buy companies in a consumer staple industry. So, but that's what I would say about the Honest Company. And it looks like you got more comments. So Jessica Alba is no longer involved with the company. Oh, well, that goes to show I'm a little bit out of date with with this company. And yeah, I mean the stock really rallied for the 1 year. So if you're watching it, boy, it must have been just crazy to see it pop up. It looks like around October timeframe was when the stock price was at a good level, and it jumped up quite dramatically. Maybe there was a rumor that they were going to be acquired or something, and it really jumped up. All right, so good luck with the Honest Company. Those are my comments on it. All right, so the other one you wanted to look at was OGN. So that's Organon, and this was a spinoff. I am familiar with this company. These guys focus on women's health. And Organon and Company develops and delivers health solutions through a portfolio of prescription therapies, medical devices within women's health in the United States. They were a spinoff. I don't remember if it was from Merck. They were a spinoff from one of the big giant companies. It was probably Merck or one of those larger ones. And their market cap's $4 billion, revenue 6.41 billion. Forward P is super low, 4. Oh man. Dividend is super high at 7%. Wow, the stock's really sold off. Now, I led the live stream talking about healthcare, right? So this is kind of an example, but we'll see where the fundamentals are. I mean, this PE is just really, really, really low. And keep in mind, one thing that I like about Organon is spinoffs tend to work. These guys were part of a larger, very well-run, massive company. I believe it was Merck. So they're very well run. They've been professionally managed for a while. They've had to report their income and be accountable to the CEO, CFO of a large company. And now they're independent. So a lot of how the company has been operating is going to be kind of a discipline that they have internally. Revenue is growing by 4%. Last quarter grew by 4%. They had a flat quarter. And then the first quarter of their fiscal year was at 5%. Okay. It's not great growth, but I'm glad that it is green. All right. So free cash flow for the trailing 12 months, $747 million. Gross margins, 58%. It's very good. Okay. So let me look at the quarterly. So free cash flow in the quarterly looks like the last quarter was about 100 million. Q2 was good at 300 million. But it's been a little bit of up and down, but trailing 12 months I think is reasonable at 747 million. Okay. Looks like it could go up from there. Okay. All right. Let's take a look at the balance sheet. Now, if they were spun off, the company could have been spun off with a lot of debt. 8.75 billion in debt. Cash is only 763. So we're up to about 8 billion in debt. Their EBITDA is 1.76. So the balance sheet I do not like. It's more than 4 times EBITDA, and that's a little high. Debt to EBITDA 4.78. So that's a red flag. The company is kind of growing, which is good. But that balance sheet's bad. And if we look at the interest expense, you see it's pretty substantial. And we're seeing that interest rates are going to stay higher for longer. So that expense item is going to stay at that level or may even go up a little higher because they may be carrying debt that was financed, 5 years ago at a really low rate, and they have to refresh that debt. They have to pay much more. So debt is not good. Debt shows that a company is not good enough, healthy enough to just load up the balance sheet with cash, pay off debts if they want to. In this case here, they're kind of behind the eight ball a little bit with that debt. So I wouldn't touch the stock because of that debt level. I'd want them to operate maybe a couple more years independent. And then we could, because they were spun off, I guess, in the 2021, middle of 2021. And so they've been operating as a standalone company for 3.5 years. So I would want them to operate a little bit more. Give me some more data. Show me that you're going to pay off that debt. And I'll just check the debt level to see if it has a trend where it's going down. I don't want to see it going up. So it is going down. So looks like they were spun off. They were spun off with a pretty sizable debt level, but they have been paying it off. That's good. They just got to keep paying it off, get that number to a reasonable amount. They're not growing really fast either. So it's not like, oh, they're going to grow and double their revenue. No, they're growing at like 3, 4, 5%. So it's going to take a while for these guys to get big and really grow their metrics. So this one's a pass for me just because of that balance sheet. I think it's risky. And I think it's enticing, instead of paying this dividend, I know some investors would be mad. Stop paying the dividend, pay down your debt, because what could make investors really angry is if you go bankrupt. In the 5 years, or I guess 3.5 years, it's down 50%. In the 1 year, it's down 6.51%. So if you compare the stock depreciation, it's gone down compared to the dividend, you're only ahead like less than 1%. So I don't think any investor would be happy with that. So that's Organon. So good luck with that stock. All right, rolling along. Let me take a look at a couple of stocks that I thought were really interesting, given that the market's been really selling off. And one of them is Vertiv. And Vertiv designs, manufactures, and services critical digital infrastructure products for the data center. Now that sells quite well nowadays because anything data center related is going to do really well. These guys are up 152%, up almost 1,000% over the 5 year. Not too long ago, you could have bought this stock for $12.43. Now it's 10 times more expensive. And when I look at this business, to me, I first want to understand the business and the type of product that these guys are putting out. The reason it caught my attention is that, not to take anything away from these guys, but they're kind of riding the AI train, and they're selling a lot of what I'm going to call lower value products that are part of the data center, but they're not like the NVIDIA GPU chips. Those are the most valuable piece right now, right? Or other chipsets. That's where the value is in the data center. These guys are selling cabinets. They're selling, power management, thermal management, piping, so you can liquid cool the operations. And all these products, they're necessities, right? But they don't have any really strong patents. So other competitors can come in and compete to replace them or compete with them and drive down prices and profits. So when I look at Vertiv, just keep that in mind. It's in the data center, but it's not NVIDIA. NVIDIA is really commanding great margins, just super profitable. Now let's take a look at the fundamentals of Vertiv. So this is a data center company. Their market cap, again, not too long ago, these guys were a 10th of their current value. So they're not too long ago, they were a $4 or $5 billion market cap company. Now they're 45 billion. Their PE is 81. Wow. 36 for forward. Strong buy, 11%. So let's take a look at them. So first, the growth isn't all that. Again, they're up, 10x. So I'd expect the revenue should have been growing like 100%, 50%. Just show me a big number. 13.2, and you're not the biggest company in the world at 7.5 billion. So that's interesting. The last quarter does look good at 19, but again, that's not like incredible growth. That's just okay. It's good, but it's not like awesome. Oh my God, I can't believe they doubled the revenue. Like Nvidia. Nvidia doubled their revenues in 1 year. That's incredible. So okay, so the top line revenue isn't all that impressive. Gross margins, unimpressive. So yeah, you're in the data center, but you're in the data center. I just showed you the Honest Company. That's a consumer staple stock. They have better margins than these guys. Now that's a problem. When you can't compete, or I should say your margins aren't as good as, shampoo for your hair or toilet paper or diapers for children, then this is a commodity business. Like I was saying, they're selling cabinets and plumbing for data centers and so forth. So they don't command a very high margin. If I could show you Broadcom for a second, which is a data center company, and Broadcom's not the example I want to go with. I want to go with NVIDIA. That's the perfect example. So NVIDIA, and looks like I'm looking at the wrong NVIDIA. When we look at their margins, when you have incredible growth and incredible gross margins, then your stock will fly up. And, I can't argue with the NVIDIA situation. I think it's still overpriced, but nowhere near where I think Vertec is overpriced, because you have lower margins, substantially lower margins. You don't have incredible revenue growth. So what gives? I guess it's being at the right time, right place, right time. And you are a data center company. So investors are just piling into data center companies. I think this stock is potentially going to really, really come down. Now, for the past 5 trading days, this one's down 7.51%. You switch over to Google. I like looking at the charting here. So it's been on a real tear, but it's down 7.5 recently. It over the 1 year, it's gone up 148%. Over the 5 year, 981%. And again, I showed you their growth isn't like, incredible, and their margins are not very good. So that's where the stock's been trading. We looked at revenue growth. We looked at margins, free cash flow. Where is that? How is that doing? Free cash flow, it's up to 1 billion. Looks good. 1 billion cash flow. Looks good. Now, can they sustain it? It's the big question, because they haven't proven that they are a big cash producing company. Last 2 years, they did that. But if you have a loss of demand for that data center, these guys are going to be hit. Right now, I think the market for a while has been expecting that data centers are just going to double, triple, quadruple the capacity. And that's not the case, but they are doing well. Now, the free cash flow, I'm going to use 1 billion and say they are growing. So if I multiply that times 20, maybe even 30, that's a 20 to 30 billion dollar market cap company. So they're well above that. And 30 billion being the best valuation I give them, 20 billion being the least. And when I look at and I'm going to look at their balance sheet just real quick, just to refresh my memory on where their balance sheet's at. So they are carrying debt, about $2.2 billion of debt. I don't think that's a big problem, because they produce EBITDA of 1.5 billion. So they can pay off debt in a year and a half or so. Now, I have run a full evaluation on Vertev. My conclusion is that the stock is overpriced by 51%. Their cash flows can't sustain the stock price. And I even use a very high discount rate because I think it's a very risky company. And the earnings per share can't sustain the stock price. So this is a stock that I'm shorting. Not a big position, small one, but we'll see where it goes. But the market's beginning to sell off. And I think it's going to sell off companies like this that are just really high priced, and it's put up or shut up time. You got to start showing me incredible growth. You got to start showing me profit. And I'm kind of putting myself in the shoes of the market in general, or your stocks are going to be sold off. February 19th is their earnings announcement. So we're over a month away from them announcing. Before that, the companies that announce that are related to the data center will move this stock up or down. But I think the heyday of this trade is pretty much getting old. I don't see it going up much more. It was incredible that they got this high, sold off, and then they went for another run. But a lot of these tech stocks have been selling off recently. It's going to show that, hey, maybe we don't have to look at fundamentals. We don't have to look at valuations, period of investing that we've seen over the last 2 years. Maybe that's beginning to be, expire. And now, hey, you got to look at revenue growth. You got to look at profits. You got to look at, how is this company going to be valued if they stop growing? And in this case here, again, the growth is not incredible. It's just okay. It's not like, oh my God, they're doubling their revenue every year. No, it's not the case. And their margins, again, are not very good. So Vertiv is a stock that I think is selling. It's sold off today. It's rallying in the after hours. So we'll see where it goes. One last bit of detail. Is there any short interest? There is a little bit of short interest, 3.44%. It's not zero. And I think if this thing starts to fall, it'll get more short sellers in there. I've got a tiny position that I'm shorting, and we'll see where it goes. So that's Vertiv. All right. So looks like, Mike, you've looked into OGN. And you're okay with the debt. Yeah, understood. All right. So that was Vertiv. Let's take a look at NVIDIA, which is in the same universe as Vertiv, but this is kind of like the company that's really made it happen, right? Look at that rise. That's awesome. Go NVIDIA. What an awesome rise. Now, this trade again, up, 20x your money over 5 years. But you see that over the last 7 months, you'd be down almost 2% if you bought it that high. I think this is showing that the market is setting limits on the NVIDIA stock. It's not going to keep going up just parabolically just forever. It's like, okay, we know you've grown. We know you're forecasting growth. Can you grow for the next 5 years? That's the question, because the price of the stock is as if they're going to keep growing at the levels they've shown for 5 years. And that's really expensive. I'm not seeing AI businesses, that are customer facing, consumer facing, that are making much money, if any at all, right? The only one that's close to it is Microsoft with its Copilot. And I don't know if that's working a whole lot. So this one here, NVIDIA is actually late in announcing. It's just the way it is. And they'll be announcing February 26th. So, geez, that's like a month and a half away. And this one's a biggie, but a lot of companies will announce that are going to affect the NVIDIA stock. The PE for next year isn't too bad, 33, because this has been a stupendous grower. Analysts believe it's discounted by 25%. Year to date, the stock's down just slightly because it had a really good up day early in 2025 with a company, and I forgot, Foxconn, announced very good volumes out of their semiconductor business, and the market felt like the other semiconductors are probably going to do well. If that's the case, and these guys keep showing up, as mentioned, Vertiv, right? Vertiv growth, 13%. Hey, call me when you get to when you get to 100%. Then we will see your stock price go up 10 times. See how Nvidia is just a stupendous grower. Incredible. And they're growing big numbers. The growth percentage is beginning to fall because these numbers keep getting bigger. So as the number keeps getting bigger, the percentage of growth will become less impressive. Just impossible to keep a growth rate of 265% when you compare this quarter versus a quarter year before. And if you have any pause in spending in that data center, this number is going to really come down. And I happen to believe that semiconductor is cyclical. Cyclical meaning you have boom periods followed by some slow periods. If these guys hit a slow period, an air pocket, oh boy, I wonder what their stock's going to do, their stock price. But let's take a look at how impressive NVIDIA has been. They're now trailing 12 months, $113 billion revenue company. They have really grown their cash flows, 56 billion. Incredible. Go NVIDIA. Gross margins are very high, 75%. So just impressive. And I don't think I need to look at the balance sheet, but let's take a look at it anyway. Total debt, 10 billion, but they have 38 billion on the balance sheet. So they can pay it off. They can write one big check. They can fit all the zeros in there and then pay off debt. So when I look at the NVIDIA stock, because I've evaluated NVIDIA G's for years now, I think they're priced at a premium of 37%. And their cash flows just won't be able to sustain that stock price. It's just not in the cards. I'm giving them a very favorable positive forecast on cash flows, and I still can't get to that stock price. The earnings per share might be able to substantiate the stock price, but the big legendary investors, they use cash flow. I use cash flow because that's truly the value of a business. The value of a business is discounting the future cash flows that they're going to deliver to stockholders. In the case of NVIDIA, I don't believe their cash flows could substantiate the stock price. And my valuation is they're worth 1.5 trillion, which is incredible. That's a huge, huge valuation, but it's not valued at where they're currently at, in my opinion. And to calculate their most current market cap, let me do a quick calculation. Right now, they're at $3.2 trillion. So they have seen, the stock price for the last 7 months, it's really been flat. So we'll see where it goes. And I know, Sergio, you're into AMD. I've never been able to get AMD to value much because if you look at their cash flows, not very good. And it's always, they can show you revenue growth, but they don't, for some reason, create a lot of cash. So I would encourage you to get your head around that valuation. I've never been impressed with the AMD financials as it relates to free cash flow. But NVIDIA has been, such an incredible stock, but now it's incredibly overpriced by over $1.5 trillion, in my opinion. This one here is going to move a lot, even though it's not going to announce their earnings. We have to wait until February 26th to hear from them and hear their CEO, who is really a really intelligent guy that really brought down the quantum computing space. Was it last week that quantum computing stocks just crashed when he said that it would take 20 years for that to be a thing, to really work? All right, so that's NVIDIA. All right, so let's go with the next stock is going to be 3M. While the tech space has just been booming, I think it's a good idea to look at some non-tech stocks that I think are really good companies. 3M is a terrific business. They've been around forever. They're an industrial stock. PE of 17, forward P of 18. They had their troubles. They had those legal problems where they got sued. they got those problems, those lawsuits pretty much taken care of, and it's in the rearview mirror. They had settlements. They paid out substantial amounts. They even divested a business in order to create the new business. $73 billion market cap, $32 billion in revenue. Analysts think it's a buy, but just a small discount. Reasonable dividend at 2%. The stock has worked for the past year. So it is a good comeback stock. And I'm glad I bought and I currently hold. The revenue, this might be a little, it's doing okay. If you do the compares on the trailing 12 months, it looks much higher. But I think if they can just solidify the business and start growing even a modest amount, this stock's going to do great. It's just a really valuable business. They have good patents. They have good credibility in certain markets. And they have decent margins, 42%. Not NVIDIA, but it's just an industrial company. They're going to get their their cash flows back. They just had some things to take care of in the current trailing 12 months. So free cash flow should go back closer to the historical amounts, which is what I use when I value 3M. Balance sheet real quick is $14 billion of debt, $7 billion of cash, EBITDA of $8 billion a year, so they can pay off debt in 1 year if needed. So balance sheet's in good shape. Now, 3M is a quality business. I like the company. I think it's a good company. And I think they're discounted by only 4%. That's where their cash flows are going to be. This is my forecast based on their history. I'm kind of using averages. But I think 3M is going to surprise to the upside going forward. This is one of those businesses that I would gladly buy at a reasonable price because I think it's a very good business. Not a big giant discount, just a good business to have. And I think it's going to work for 2025. I think 2025 might be the year for the Dow to outperform the NASDAQ. We'll see. But it's going to be a year where maybe we need to take a year off from seeing technology just continue to see its stock prices just jump up. And an example of that was NVIDIA that I showed. For the last 7 months, it's done nothing. So that's an example of what's going on. We could also look at Microsoft, and maybe I can look at Microsoft next, and I'll show you something that's interesting there, which is another technology stock. So 3M is a good business. I like the 3M business. I'm invested in it and actually bought shares today. And I bought shares today on an up market. I know, Mike, you're probably like double checking your speakers. Yes, I bought as the stock went up. One thing I'm going to do a little more this year is, it's not a bad thing if a stock price is going up. So I'm going to buy into a stock and get to that position by dollar cost averaging and buy both on days when it's down and buy on days when it's up. Because if it's going up, that's good news. That means other investors really like the stock. So I bought 3M today as an example. I'll continue to buy. I want to buy and have a good position to 3M. It's a Dow component, so I'm going to go for it. It looks like, Mike, you like Qualcomm. I definitely like Qualcomm. It's probably my favorite semiconductor right now. I think it provides good value for the investor. All right, so we looked at 3M, and I mentioned Microsoft. So let's take a look at Microsoft. So I don't think Microsoft needs any introduction. We know it's the biggest software company in the world, $3 trillion market cap. The 1 year, it's only up 7%. So back to the valuations on technology are not going to go up forever. Microsoft's an awesome business, incredible business. It's done great for 5 years, 158% return, appreciation. They pay a small dividend. Their PE is 34 for the current year, forward PE of 31. So that's a little bit on the expensive side, but it is Microsoft. Analysts think it's discounted by 22%. They're using earnings per share. Now, why do these companies worth $3 trillion, right? Well, I'll go straight to the part that's the most impressive is because Microsoft in this case generated 74 billion, 59 billion, 65 billion. These are all free cash flow. This is why Microsoft's so valuable is they generate that free cash flow they could put on the balance sheet. They can buy back shares. They can dividend. They can buy other businesses. They can do so much with that cash. And cash is the ideal metric to look at a company because cash is cash. You can't play around with that number a whole lot like earnings per share. Earnings per share, you can put a lot of things in your financial statements that'll make a number look a little too good, or maybe the number doesn't look quite as good as it should. But cash flow is cash flow. It's very clear. And that's why Charlie Munger and other big investors really depended. Charlie Munger is no longer with us, but he only used cash flows, as well as a lot of other investors to do fundamental analysis and valuations. They use cash flow. So that's why Microsoft's worth so much. And they're a gigantic company, $254 billion in revenue, and they're still growing at 16.44%. I'm going to harp on Vertiv one more time. You're growing 13%. You got this tiny number. Not impressed. 16% growth on this giant number. Very impressed. Very impressed. Each year at 16%, that means they're growing about $37 billion, $38 billion in revenue per year. That's like a big company in a space. And let's look at their margins. Their margins are 69% because they are a diversified technology company now. So just super impressive business. A business that I'm buying into. Because Microsoft, there's only one. There's only one Microsoft. And certain markets, they're just doing fantastic. And I think they're discounted by 15%. So I'll gladly buy shares. I bought shares today. I bought shares last week. I'm going to build a position in Microsoft. I think I'm going to be glad that I did so because the stock hasn't moved a whole lot, but the business keeps getting bigger. Their cloud business is doing great. So the businesses, I think they have a very solid position in the AI space. If you think about, they already have a Copilot business, So if AI becomes a thing, which it's still it's not like, oh yeah, AI businesses are awesome like Google search or Microsoft software or Apple iPhones. No, it's nowhere near that type of maturity in a business. Microsoft has a good position in the AI space, should it become something. So overall, just Microsoft's firing on all 8 cylinders, really good business. And I'll never find huge discounts on Microsoft unless they're troubled, which isn't the case. So I'd gladly buy shares of Microsoft. So I thought I'd share that out there. And it's good to see just such a great company in Microsoft compared to like a Vertiv, which I think is overpriced. All right, so we're humming along. We're 17 strong on the live stream. Thanks, everybody. Appreciate it. While I've got your attention, let me just say I'd really appreciate you considering being a paid member. You can tune into conference calls on weekends. We just had 2 great ones. We went over stocks. You'll see some of the recordings, but you get to have a conversation with the rest of the community. On live streams, I look for names that are paid members. And I really, I take suggestions on the stocks that I'll review on live streams from the paid members, as well as, stocks that I think I want to cover because they're really interesting. So please consider it. 3 different programs and details are in the details of the live stream. Thanks. All right. So we covered Microsoft. Now a stock that's beginning to come back nicely is CVS. Now, CVS has had a troubled past. Man, it was doing really well, coming out of COVID. And then it's just really come down in value. Over the last year, it's down 32%. but it's been having a decent month, especially the year to date. I think is looking pretty good. It's up 14%. I think collectively it's up 17% from the I think in the recent 2 weeks. $64 billion market cap. Revenue is gigantic at 367, and big dividend of 5.16. Analysts believe it's discounted. One thing that you would think with the stock price dropping so much that revenue growth would have been negative, but that's not the case. They continue to grow their revenue, and it's a big, giant number. Isn't that interesting? Where you have a big, giant number, you keep growing it, and your stock price is dropping. Now, the healthcare space has been getting hit left and right, so that's part of it. And also, CVS, their cash flows have, I think, temporarily come down. But historically, their cash flows have just been fantastic. If they go back to even 80%, 70% of their glory days, this stock is going to take off. When we look at their margins, they have low margins because they have a retail business as well as a healthcare business. And they have more revenues. Like if you look at Costco, you're kind of in this neighborhood. And that's where I put CVS, is similar to like a Costco or that type of business, since the retail operations are the biggest. Now, I've said many times that I don't like buying retail businesses, but this one's a little different because they are a healthcare company. They're an integrated healthcare company. So they'll be around, there'll be demand for their products, ongoing, because we're not going to, good economy or bad economy, we take care of ourselves. We go get our medicines from CVS if needed. And this stock, I think, has just been beaten down and is a really, really nice, valuable stock. I think their balance sheet's in good shape. Let's take a peek. Debt's $82.7 billion, $9.6 billion of debt. So we're at $73 billion of net debt. Their EBITDA is 14. So this one is a bad balance sheet. They have too much debt. They got to get rid of some of this debt. And so that would be debt to EBITDA 4.8. So this is similar to OGN. They got to get this debt down. That should be a big priority. They got to get their cash flow going. So CVS has got their work cut out, but it's such a just sold off stock. I have a tiny position, and I'm going to keep buying shares just because I think this business is going to recover. It's a necessity. We can't do without CVS pharmacies. And I'm going to keep buying into this, taking the risk on the balance sheet. This is a known commodity. CVS, it's not going anywhere. We need it. It's not like you can close all those pharmacies, and no, you can't. We need it. And looks like we have some comments. Walgreens is a better buy. It may be. I think Walgreens is also really sold off, and it's a direct competitor to CVS. I think both could be good. And I know Walgreens had a really good month. I think they were early to announce. And was it the stock that went up like 20% on that one day? It could be a pretty interesting stock as well. So that's CVS. And I'll put CVS and Walgreens on the same chart. Let's see where they've been performing. All right. So for the year to date, Walgreens is down a little bit. CVS is up. And then for the 1 year, CVS is down 33, Walgreens down 48%. I think Walgreens has seen a nice, I think this was a pretty nice rise. I think in this space here, we're dealing with two companies that are really beaten up, but Walgreens was really beat up. In the 5 year, it's down 78%. The 1 year, it's down 48%. So I guess pick the one that you think you like the most. And I think both should be able to recover because they're in a space that should recover. So, but thanks for bringing it up. I think it's definitely the compare that we want to make with CVS is Walgreens. All right. So that's CVS. And then one more stock, and then I'm going to call it a day. That's LMT. While technology stocks were all the craze, I did sell some stocks in November, December, thinking that, we would have a pullback early in the year. And I started buying into Lockheed because I thought, when you look at the stock, it really did well for a period of time and it sold off. I'm like, wow, it's a good business. I would gladly buy shares. So I've been buying into Lockheed. It did really well today. Business has been growing. And, aerospace and defense, this is an industrial stock. It should do well because our country is going to fortify its military with the best weapons there are available. The PE on this is 17, reasonable. To buy, analysts think it's discounted substantially. So I started buying into it, and I'm glad I did so. Produces good free cash flow, has decent margins. Free cash flow has been consistent, and gross margins are somewhat low because in government contracting, oftentimes they have cost plus contracts. You spend X, and then they give you like 10% more or 15% more. And that's why their margins are low. But the good news is you have a very your revenue is somewhat assured because the government's going to buy planes and weapons from you for a long time. So that's a positive of Lockheed Martin. When I value Lockheed Martin, and I've owned Lockheed Martin before, I owned it for a long time. I have a discount of 26%. So I'm agreeing with the analysts and substantiated by their cash flows and their earnings per share. So I really like Lockheed. I'm going to buy that stock, assuming it doesn't fly up too fast. I'd like to buy a nice position of that. I think it'll be a nice addition to my portfolio. I'll keep my technology stocks. I'll keep my Meta stock. I'll keep my Google Alphabet stock, but add a nice, solid industrial stock that's in the aerospace and defense business. That is Lockheed Martin. Very good day, good stock. Glad I'm buying it. This has been a very surprise that the stock really rallied up this way and then came back down. There is no big news there. It's just investors were excited about the expectation that Donald Trump was going to win the election and fortify the military. Okay, I understand that story. But then the sell-off, I did not understand. I looked at the fundamentals and I am a buyer. All right, everybody. So thanks so much for tuning in. We are 24 strong on the live stream. Man, well, I can't go if we're going to have 24 on the live stream. We got to keep going. Let me go a couple more here. So let me get into Citi, which is going to announce on Wednesday. And I think a trade that worked was that in the middle of 2023, banks had a tough time with these fast rising interest rates. So kind of really made their businesses tough. But then 2024 set up to be a really, really good year for banks and other financial companies like insurance and so forth. And this is a stock that I got into, and I'm glad I did so. 38% on appreciation, 3% dividend. So that's a winner. That's a winner by every measure that I could look at for a stock. It's a big bank, but it's the smallest of the big banks. Market cap 137 billion. JP Morgan's much bigger than that from a market cap perspective. Revenue is 69.3 billion. Forward P is 10. Really low PE. Earnings per share based price targets are 10% higher. And I agree with those price targets based on earnings per share. Banks, I have to use a different valuation method. I don't use free cash flow. It's not right to do so. So I look at other metrics, but I would say that book value is one thing that I got to keep an eye on with banks and make sure that they're growing their book value because that's a key measure of a bank's value. The book value has been growing for Citigroup very well. If you look at JP Morgan, I used to be a JP Morgan stockholder for a long time. They stopped growing their book value, which is why I got out. And this one's been growing nicely. Look at that nice upward slope. Nice job, Citigroup. So I'm happy to buy more shares in Citi, and we'll see what they announce on Wednesday. When I value Citi, I calculate a 16% discount. Not a bad discount on a good stock that pays a nice dividend. I'll buy Citi. That'll be my one big bank. Good to have one good big bank. Put it in the portfolio. So Citi's looking good. Looking forward to Wednesday's announcement. They'll announce before the market opens, and I will definitely cover it again on a live stream or a video. All right, everybody. Well, thanks so much for joining. We are 16 strong on the live stream. I appreciate it. And I would appreciate you becoming a member. Please consider it. You can join for $10, $25, $100. And I'll work very hard to make it worth your while. And it'd be great to have you on our investor calls on weekends. And you can enjoy the benefits of being a member. Hopefully you can become a member. All right, guys. Well, I hate to shut it down with so many people on the live stream. I appreciate you guys attending. Let's go with let's see where this market heads. Tomorrow's going to be kind of, in my opinion, the calm before the storm. Tomorrow, no big announcement of data, but Wednesday, those earnings are going to be announced before the market opens. And that's the storm. We're either going to go up a lot or go down substantially. And that's where it's really going to move up or down. So between now and then, just take a look at your investments, see what happens this week, especially around financials. And I'll try to live stream when I can, probably in the evenings like I just did. And again, thank you so much for joining. Have a good night.